Alright, hi guys, so welcome again to another video from me, Greedy Trader. So I'm gonna talk you guys through, based on a question that I got from one of my group, and awesome guys, thanks so much for joining the group, because basically everything I put out there is more or less to help traders develop. So obviously from my standpoint, you know, I've kind of cut my teeth in this business and I kind of don't need to do any of that, but I'm really excited to do it because, again, the Discord server where all of this happens, and by the way, just read the description if you want to see how you can access it, etc. But it supports the Udemy page or the Udemy courses, which have helped traders immensely over the years. So I've been putting out these programs, short, bite size, super cheap, but hey, look at it as my charity gig to society. And yeah, I hope, and obviously you guys have been enjoyed it, and more so it supports the guys who are actually doing the programs in Udemy. And believe it or not, we are creating better traders, and this is awesome. Anyway, enough of that. Just read the description below if you want to find out more, basically. And again, don't forget to hit that like button or subscribe. Awesome stuff, guys. I want to keep creating content like this for you guys on YouTube, even though the YouTube is kind of a snippet, it's kind of a support for the Discord server as well. But I like the fact that I give out a lot of meaty content here, because again, it just means that the value that traders get from me on YouTube is immense. And I'm very, very certain, having been a YouTube browser myself, that you cannot get the same value around certain topics on YouTube. But anyway, this is in response to a question in the group, so I'm going to walk you guys through something specific on volume price analysis. So I'm going to be covering in this specific video a very simple technique that you can use when dealing with your volume price analysis, and particularly we're going to look at volume price analysis bracketing. Okay, so this is going to be hugely important. Now again, I was asked the question of how do I know, what's the significance rather of the higher volume spikes, and how do I essentially, what am I looking for? Okay, so and hopefully I've understood the question right. But if you're asking me, in effect, what am I looking for? Well, and I'm just going to do this, and guys watching, it's a very simple technique. And by the way, at the end of the video, I'm also going to give you a few tips and pointers, so stay tuned if you want to find out what those are. Just stay tuned till the end of the video. But anyway, moving forward, so I've created here, so let's start from, say, the 10th of September. Right, so I've created the highest volume on the 10th of September, which I bracketed off, and let's say because it was an entire black candle, so bearish candle, so because it was an entire bearish candle, sorry about that, slight interruption there, but because it was an entire bearish candle, we have to assume that it was sellers, right? It's an assumption it was sellers. And so as a result, I bracketed off red, and obviously, as you can see, time progression, I bracketed off this one green, right, as being the highest volume of the day. So I guess in many ways, tip number one is that you might want to check your volume in terms of reference for highest volume at the end of the day, because it gets really difficult to do it dynamically, because obviously you don't know what the next volume's going to bring. But there's also a very good way for estimating what volume might be on a developing candle, because you can actually sort of deduce where it's going to be using the time method. But I'm going to explain that in a different video. And again, guys, if you want to find out more about this, we do have the Udemy programs, and we cover a lot of these things as well, so just check them out. But yeah, but I'll discuss that particular topic in another video. But again, it's a lot easier to do, sticking with simplicity, if you actually just waited till the end of the day and worked it out. So we're going to take these two. So this was on the 10th of September. You can see the highest volume for the day, which is also above average. So if you look at it in reference to prior days, this is actually pretty decent volume, and it was coming down on a bearish candle. Now, for those of you guys who've also done my Udemy's on order flow, right, this would be an example of iceberg. So we had a good what would be a sweep, and then we hit an iceberg, and we can see the market stayed steady and couldn't really break the lows. And after a sweep, you should get price action continuation, but we don't actually get that. Instead, we get an iceberg, and then the market goes back up. So that's the first clue that traders are iceberging this market around about this kind of price level. But again, the significance of bracketing this off is so we know that where the heavy volume traded, and did we get continuation, did we get reversal. So this becomes an area or a strong, let's say, support area, or area of where traders are generally invested. There's definitely something going on here. Now if we go a few days on, you can see we well, the next day on, you can see we continually traded within this area, and then we started to slip out the following day, sort of about 3 p.m. we get what looks like another sweep, and then another iceberg. So we get a sweep, we don't get a continuation, and then we get iceberg, right? And then this time we sort of push up very, very strongly, and we got this big bullish sweep where obviously offers got lifted quite heavily, and then we sort of bracketed up at the top. So now we got 2 points of reference. Now just looking at the structure, which is what I always say to traders, and just looking at the structure, this is actually a consolidation, right? So this is typically what we would refer to in earlier as like our ABC type structure that's developed here. So it's definitely a consolidation. I think we're all in agreement of this. After these 3 days, we kind of know that this market is consolidating here, and we're soon going to break out, right? So what's the significance of bracketing this off? Because now we got some additional information. One, we know that we've been iceberg down here, we've been iceberg down here, and this is generally the volume of interest. But there's actually something more important, actually very, very significant, that I'm going to put into play here. And that is the fact that we have seen strong bullish price action, right? So it's pretty strong, right? Even the volume associated with it, despite it being falling volume, is still quite strong relative to spread, candle spread. So, and we can see us offering in to where the initial bearish sweep was, and where we had that first iceberg. So there was a lot of volume trading here, but we're now offering in to these prices, which gives me the idea straight away that the buyers have regained significant control. Now if you're looking at this on the depth market, for example, you would have noted the iceberg taking place here, and you would have noted the iceberg taking place here, and this will become apparent to you because you'll be able to see the heavy clips coming in on the offer, and that would have given you the idea that traders are coming off those bids. So they're coming off those buy limits, and they're jumping into market at the offer. So this would be very, very clear on the dome, for example, if you were actually observing that over the course of those 3 days. So you would have noticed that as we traded into those prices, the offers probably got a little bit bigger, and as a consequence, obviously the market is trending upwards. But again, for me, the significance is the fact that we're showing volume or buy volume in an area where potentially we're zoned off for sell volume. So it's what I normally say to traders. Again, for those of guys who do my market profile programs, I always say that if the offers are too close to the bids, then that's a significant issue, right? So in this case, you can see that we have a lot of bids coming in, and then we got heavy offers as well. So everything's pretty tight. So we got a lot of buyers standing down here, we got a lot of sellers standing up here, and that's what leads to the consolidation. So the volume's kind of already telling us that, because we got overlapping volume on the buy side. Obviously traders are expecting to be long, and then we got overlapping volume on the sell side. So if you note, so that's our highest volume, which was on the buy side. So that's clearly an iceberg, and obviously that's a heavy unload. And over here we had a sweep on slightly lower volume. So if you just contrast it, that high volume, strong spread, low volume, strong spread, I mean, obviously if you work on the principles of volume price analysis, that would easily start to tell you that something is considerably amiss for the simple fact that we're offering in with much higher volume into an area where we'd seen pretty strong volume in the past. So at that point, rather than being in a hurry, as most traders are, to get long because now you're fully confident, you can just wait for that confirmation. I mean, obviously this happens sort of about 2 p.m. In London, 4 p.m. in Europe, so it's quite late. So you can actually just leave that a run, and as you sort of drift into that Asia session, you can start to see the market picking up strength through Asia, and you can start to see us sweeping into Europe. So this is actually be a really good place to be long at that stage, because there are a lot of things now that are becoming apparent. Not only is the buy side showing continuation, so we're getting offers coming up, but we're also trading now above that heavy volume. So again, that volume that we were mapping, we're now above it. And if you take the concept of a consolidation break, so this is just pure price action trading, guys. This is no indicators or nothing, it's pure price action trading here. It's learning to read the right side of the chart, I'll normally say. So in developing price action, if you're seeing this move on a sweep, then you could be long anywhere here. And realistically, I mean, obviously I never like to comment on protection, but I guess we're all thinking the same thing right now in terms of where stops should be. I mean, some traders will put their stops where they're easy to reach. I prefer to have my stops in a hard to reach place, especially if you're running these kind of volume based strategies. Then this is where you should really be from a risk standpoint, and you are going to get pretty decent continuation, because if you look at how that price action's progressed over the past couple of days, you are seeing some strength here. Even though it is truncated strength, probably strength that will not last in the long term, but it's definitely, it will make up for your risk reward, right? And that's what we want. We're not here to prove the market wrong or right. We're here to make money. So the truth is that once you've settled in to your trade, you should be relatively protected at this point. I mean, again, if we're trading in the future under these prices, then we are going to start seeing heavy bids coming in for sure, because at the end of the day, we're trading under huge reference points, iceberg zones. I mean, the guys who've done the depth of market order flow program will understand what I mean by icebergs. Again, when you're hitting those icebergs, and the market's being returned heavily out of an iceberg, I mean, that's big information, right? We don't need to know what's going on in the news to tell us that we've been iceberg to ice in 3 days on a significant timeline. Then we need to start getting real serious about how we view those positions. So that's the whole idea about bracketing volume, is to give us the perspective, or kind of create a map of how traders are behaving. Again, I did promise at the end of the video I'm going to give you guys a few tips, and one of those is always try and consider what portion of the chart that you're seeing volume take place. Like, for example, we're seeing heavy volume at what appeared to be the top of a significant bull move at this stage, so we were right to think of it as selling. And then we're seeing heavy volume again at the bottom of what appears to be a correction. Again, that's giving us some context. So we want to always check and see where we're seeing that volume. So if this is a consolidation for continuation, then I can estimate that I'm not only continuing against this price action here, I'm continuing against this price action here. So I can start to make some educated guesses that I'm going to get a near parallel move to the highs, just because I'm continuing out of what is a much larger consolidation. So these are things that you kind of have to narrow down. So it doesn't really matter the time frame of the chart I'm looking at, whether it's 1 hour, 4 hour, or daily, but this is all translated into the longer term. So what I'm seeing here is bullish continuation. So in a nutshell, guys, I want to be pretty cautious when I'm trading and thinking that I'm going to get a bearish decline or something. I should be looking at the whole picture here rather than just a small portion of it. So again, the purpose of checking where that volume is happening, so you can make some intelligent deductions as to what may well follow next, or especially if you're seeing price action develop on that right side of the chart. So I'm talking about sort of current price action. So if you're seeing that develop, then you can start to put 2 and 2 together and say, well, this is actually a high probability situation to take advantage of. So I'm just going to reverse you again, just very briefly now, to the bottom. So let's just go back much more historically to the low side, so we can see, for example, the highest volume of the day was trading here, right? So, and again, there's more to it than this, guys. Obviously, again, you know, I'm trying to, you know, answer a specific question, but there is more to volume price analysis than what I've just showed you. But this is one of the easiest ways you can actually start to apply your volume price analysis trading or techniques. So again, you see highest volume of the day, and if you look at what's taking place here, so if we just for reference purposes, we just change that color there to blue. Yeah, sorry guys, I've got a bit of snivels, changing seasons, so I am not immune. Alright, so guys, so here you go. So again, you can see a similar sort of thing. So we have a very strong price action here. It does look like a bullish sweep. We don't see any heavy seller returns. Again, you should start to, as we start to sweep through. This was about 7 a.m. in the European session in London. So again, as we start to sweep through, this could be potentially a decent long. So these are your risk should be sort of covering that voluminous area. The market will have a hard time because, again, if you look at, again, taking reference from that order flow program on Udemy, again, you can see this price action that happened here. And this is typical when we get into situations where the market, in effect, there has been a trader who has been layering the market. Okay, so again, layering is a very common practice in today's market microstructure type trading. So when people are working with algorithms and stuff like that, so again, it's quite possible based on this price action that there was some layering here, and what's happened is that the market's come back to sweep across that, just because obviously there weren't sufficient orders at the top of that market. So again, we kind of want to keep out for these sort of behaviors when traders attempt to either spoof, and this could also be a spoof, by the way. So again, I'm looking at it as layering. It could be spoofing. So again, a trader could have put a very big clip to spoof the market, and ultimately now the spoof has been realized, and now we're sweeping through. Right. So when you get these kind of sweeps just against what appear to be big spoofs, then you kind of want to also look into that as well. So again, yeah, this was denoting that we could be long, and this was a good place to take the trade. It might have been very difficult for you to see where this is going to be, but again, reading the right side of the chart, current price action, this was a pretty decent sweep coming through. So again, you could have been happy to sort of trade this as we started to develop the sweep into sort of 121, 22. And again, you know, it was pretty decent price action over 2 days. So again, just be aware ultimately of how volume develops, you know, and the importance of bracketing them is creating that reference point, especially relative to prior type price action. All right, awesome stuff, guys. Thanks for watching. Thanks. I hope you enjoyed the video. Any questions, let me know. And again, don't forget to subscribe.